Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I'm going to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. For today's income pick, we're going to look back on a stock we profiled back in April of 2023. MDC Holdings Inc., traded on New York Stock Exchange under symbol MDC. As of one of the country's leading home builders, it had a banner 2022, which included record home sales revenue and over 900 million of cash flow. At the time, it was trading at $38.46 and paid a quarterly dividend of 50 cents per share, or $2 on an annualized basis, for then dividend yield of 5.28%. John, what can you tell us about MDC Holdings and how has the stock and dividend performed recently?
Yeah, thanks, Mo. MDC Holdings, it's a great company that has done quite well, actually, since we profiled it in April. Its dividend payout has increased 10%, and its share price has rallied an impressive 35%. And with its strong presence in some of the best housing markets in the country and new home market benefiting from a lack of existing home supply, this has created a real opportunity for home builders like MDC to increase their market share. It's also actually helping stabilize housing prices.
And John, just to recap, you could tell our viewers a little bit about what MDC Holdings do.
MDC Holdings builds houses and provides everything else homeowners need, actually. It's the 11th largest home builder based on closing volume and the 9th largest U.S. home builder based on home sales revenue. Since its founding in 1972, the company has helped over, I think it's 230,000 buyers move into new homes across the country. Where lots of companies build homes, MDC specializes in single-family detached homes for first-time home buyers and those looking to move up to affordable markets. Its subsidiaries have home building operations in 32 markets in 16 states. In fact, its 32 markets cover 48% of the country's top 50 metropolitan areas, some of which include, Denver, Salt Lake City, Las Vegas, Los Angeles, Washington, D.C., Seattle, up and down the West Coast, and even Orlando, Nashville, places like Albuquerque. Most places you can think of, frankly. So, and in addition to building homes and communities, MDC helps its customers design the insides of their homes, selling higher margin in-house merchandising like lights and cabinets, kitchens, etc. Its subsidiaries also provide mortgaging, financing, insurance, title, and services. Again, everything under the umbrella of housing, basically.
If we look at the overall housing market in 2022, it was a really tough year for U.S. real estate, with housing market losing about $2.3 trillion in value from its peak home prices. But MDC had a banner year. Explain a little bit.
Yeah, management even called it a banner year. Total home sales increased 9% year over year to 5.59 billion. Home building pre-tax income increased 5%. Net income slipped 2%. Despite the slight decrease, it still represented one of the most profitable years in its history at 562.1 million, or $7.67 per share. Meanwhile, cash flow from operations came in at 905.6 million, compared to cash used in operating activities of just 208 million.
And how's it doing in 2023 so far?
It's been doing quite well, delivering strong results. In the just completed second quarter, it generated net income of 93 million, or $1.24 per share, on home sales of 1.1 billion. Management noted that net new orders increased on both a sequential and year-over-year basis, and given the favorable industry outlook, it has been more aggressive in the land market, purchasing over 1,300 lots alone in the second quarter. And as a side note, for the first time in over 2 years, the company achieved a sequential improvement in the average construction build time for those homes that closed in the quarter. Now, one-time supply chain conditions and material availability have also improved considerably since the pandemic, allowing it to project a construction build time of under 180 days. And with 1.8 billion in cash and marketable securities, it is more than enough liquidity to both expand its operations and continue to focus on its industry-leading quarterly dividend.
And John, what can you tell us about their dividends?
Well, when we looked at MDC Holdings back in April, it paid a quarterly dividend of 50 cents per share, or $2 on an annualized basis, for a then yield of 5.28%. Since then, the company has increased its quarterly dividend 10% to 55 cents per share, or $2.20 per share on an annualized basis. When the payout actually happens on August 23rd, the company's dividend yield will sit near 4%. The increase is certainly welcome, but not a total surprise. MDC has not missed a quarterly payout since 1994, and it's raised its annual dividend for the last 7 years. For example, since 2016, the payout has grown 189%. And as a point of interest, MDC provides the best dividend in the industry. The average industry for its yield for its peers is just 0.7%.
Now, generally, we don't like to see a dividend yield go down.
No, exactly. Generally, a lower dividend yield means the company has cut its payout, but that isn't the case here. It's important to remember more broadly that dividend yield works inversely with share price. As the stock price goes up, the dividend yield goes down, and conversely, if the stock falls, its dividend yield will increase. With the case of MDC Holdings, the company's quarterly dividend payout has increased since April to 55 cents per share, but the yield has fallen from 5.2% to around 4%. Now that's because the company's share price has gone up so much. When we looked at MDC Holdings back in April, it was trading at $38.46 per share. On August 1, it hit an intraday high of $51.81 per share for a 3-month return of 34.7%. That puts it within striking distance of its all-time record high of $57.50 per share.
So since April, even though MDC's annual dividend has gone down, its dividend payout has increased by 10%. Its share price has climbed by almost 35%. If you really think about it, it's a perfect combination.
Yeah, and to put that number into perspective, over the same time frame, the S&P 500 has gone up only 9.5%. On top of that, the average dividend yield on the S&P 500 is also just 1.5%.
John, thank you so much for talking about MDC Holdings. It continues to be an excellent dividend payer with a rock-solid balance sheet and reported record 2022 revenue and has been reporting strong results in 2023. To better grapple with ongoing economic uncertainty, the company has taken a proactive steps to ensure it is in a position to weather the current slowdown and take advantage of an eventual recovery. This should help not just its share price, but allow it to continue to reward dividend hogs with the best dividend in the industry. And to repeat, since looking at MDC in April, its dividend payout ratio has increased 10% and its share price has advanced 35%. That's it for today. We'll be back with another video soon. If you want to read more of what John writes, you could head directly to www.incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.